Hey there, welcome back to this week's episode of Finance Fridays. I'm your host, Lucas Bolahood with the Bolahood Group at Coldwell Banker RMR Real Estate, and I'm joined by my lovely mortgage lending partner, Alexandra Jobb with Mortgage Legacy Lending. How are things in your world today, Alex?
Great. Good. I've got a couple of updates for you. I like to share good news. I
I
heard
like
you've
good
been
news.
busy.
What do you have going on then? Let's start with that. Kick it off.
I will kick it off. So, as you know, Luke, the report came out about inflation numbers, and inflation is coming down from
Mhm.
September. We were at 3.8, and then October's numbers bringing us to 3.1. So, very good news story there. We've also heard that, as we were expecting, that the Bank of Canada won't be raising interest rates in the start of December. So, it won't be a surprise. No surprises, hopefully. I know we usually bet, but I think this one's, we're just going to take it easy.
I think we let it roll. You know what?
We'll
Like
let it
I
roll.
read an article this morning before we jumped on, but the governor for the Bank of Canada has announced that they don't believe rates are going to go up again in December, and that's a good thing, obviously.
Yeah.
For people's borrowing power. So that'll be what, three straight announcements with holding of rates.
Yeah, that
So
would be great.
yeah. So
Would be
that's a
nice.
positive sign. Bond rates are trending in the downward slope as
Yes.
well. So that's what we want to see. And you have fixed pricing has had some changes too, right? That's
Yes.
looking better
So
for
I'm
people.
getting updates from lenders on a regular basis. And when new rates come out, we get an email. So we have seen that downward trend, some better rate sales. The market is still sort of cooling, but it is, for the inventory that's out there, I'm sure you can speak to that. It is still it's busy, right? Because there's maybe not so much to work
We've
with.
got more, I think, like there's fewer buyers certainly in the market right now. People have been priced out based on affordability. We were
Yes.
talking about this offline, I think, recently, where if you're trying to buy a home between 900 and $1 million right now, based on just recent interest rates, with 20% down payment, you're going to be servicing on a monthly basis like $5,200 to six
It's
thousand
so
dollars
much.
on the high end per month,
Mhm.
right? Just on the existing rates. So that's a lot of money for people. So to get into the market, when you're looking at the average price being $931,000 right now, or 930, something like that,
Yeah.
and that it's hard to get into that market to have and carry a payment that's in that neighborhood, right? So that's what's going to push prices down a bit. But it's the people who are in the market are those existing homeowners for the most part, I would
Yes.
say. They've got lots of equity in their home. They've been in the home maybe for 5 or more years, and they are in a good position to not need to take such a large mortgage if they're moving up in the market, for example.
Yes. So speaking to that, and you've got your existing homeowners, of course. There are those first-time home buyers, and I mean, it's been really hard on them over the last few years, and bidding wars and prices and interest rates. It's been tough. But I do have just something to throw in there as an idea or solution. I was at a lenders event this week, and was talking to business development managers from 32 different lenders. So it was great information. One thing for our first time buyers and it's not always first time buyers, but mostly it applies to that case, is when parents want to help out. So we first think of co-signing, right? Or co-borrower. And what that typically means is mom and dad, or mom, or an immediate family member is coming to help that borrower. They're coming on title and they're coming on mortgage. Okay. And traditionally, we've got co-borrower and we've got guarantor. Now, guarantor would be for that situation where we can't use the client's income, or sorry, that parent, let's just call it the parent's income, to help the son or daughter qualify for the house. One of our major lenders at Dominion Lending is allowing for that guarantor to come on. They do not have to go on title. We can use their income for qualifying purposes. And the mortgage does not report to their credit bureau. So I've got clients that we've talked about that in the past, where parents want to help, but they don't want the debt on their credit bureau. They don't want to have to sign the purchase agreement. And here we are with a solution. This is for insured and insurable deals. So I'd
Mhm.
be more than happy if you've got someone in mind, or any viewers watching that thinks, hey, that might be a benefit to me. Give me a call and we can go over the details.
Yeah, that's a huge perk, right? And again, like, if someone's got to put their neck out, not to say they wouldn't want to, but to put their neck out for their family member and how it affects their own situation, and they're also responsible for that mortgage, is not to say they're not, they are still as a guarantor, but as you're saying, it affects them a little less. It's not as invasive, let's say.
Yeah. And, we also get clients where the parents are on title and then down the road, the couple or the individual that bought the house, the primary borrower doesn't want mom and dad on. And when they're on title, they have to go through a lawyer to get them removed. So there we're saving that step where if they're not on title from the beginning as a guarantor, then we don't have that cost down the road.
Right, right. And that's where, you got your lawyer's fees and your fees
Yeah.
with the, registration office to process all that paperwork, right?
Exactly. Yeah.
Yeah. Well, that's huge. And I think it is a positive trend. Like with rates coming down, we are seeing like certain price points in Durham region are seeing a lot of activity. I was having a conversation with one of my colleagues in the office here the other day, and they were offering on a home in Whitby that saw 30 plus offers on it. And they were the successful buyers, which is fantastic. If you have good people on your team helping you with these initiatives, you can be successful. And a number of clients we've been dealing with as well, or that I have, excuse me, that we're running into multiple offers in a number of situations, and we're starting to see a lot of conditional deals take place. Just running numbers this morning, for example, Alex, and so far November, we're recording here the 23rd, so call this through the 22nd of November. There's been 397 sales in Durham. 9 and another 90 that are conditional. So
Wow.
that's 20% of the existing firm sales are still available to firm up. So, when we were in October, there's 588 sales, and we're heading in that direction again, to be in that same level of activity. So the buyers that are in the market are certainly much more serious, and the higher price points you're seeing are having a little bit more trouble selling, or they're much more sensitive to that relationship between price and condition. And that's actually one thing I did want to talk about a little bit more, because we're in a balanced market right now. We're sitting at a little over 3 months of inventory and almost 3.5 across Durham, and that makes it a little more challenging for people to have their house listed at a higher number if there's concerns with the condition of the home, if there's updates that need to be made to the home to make, to bring it up to that price point that a buyer would not only be able to afford, but would be willing to pay for that, that amenity in the home kind of thing. So if that balance isn't there between the price and the condition of the home's very likely to sit on the market. And we've seen that throughout Durham, throughout Ontario, throughout Canada. I don't think it matters too much where you're looking. If those things don't align right now in a market as such as this, the buyers are just going to go find something else that where that relationship is much more in unison than ones that aren't.
It really depends how motivated the sellers are. I've got a property in my mind that I can think of, and it's been sort of on and off the market all throughout the year. Like, obviously the price it's not priced right because it's just sitting and sitting. I mean, all the power to the seller because they can obviously afford to carry the property and they don't need a fast sale, but it has to be priced right if you want it to move, right?
Exactly. And you're not getting the tire kicker, buyer now who's just going to go in.
Who has time for that?
Right. Well, and you know what? Like, I'm not going to lie. Like, we have had some listings lately where you do get a very underwhelming offer that comes in, and that's okay. From a homeowner's perspective, they shouldn't be offended. That's one of the things you hear from a buyer's
How do you
agent.
deal?
I don't want you to be offended, but this is our offer. It's like, I understand this is maybe what your clients can only afford
Would
on
like
this
to
home.
pay,
Like,
or they would like to get it for that price, but doesn't mean that your seller has to take it, right? How do you navigate that, Luke?
Well, generally, I think we're obviously making sure that we're current with what's going on in the market, right?
Yes.
We know what's actively on the market that's comparable to ours, or how we fit in to that hierarchy of homes relative to price points, and knowing what we are obviously trying to accomplish with that. If we've got unrealistic expectations, excuse me, then that's something that I need to manage better. Right?
Yes.
If you're thinking that you're going to get the sun and the moon for a home that's only going to give you, that a buyer's only bringing you the sun, well, I've made and if I promise you the stars and the rest of the universe, there's a problem there, right? So I don't know how I got down that analogy rabbit hole, but that's where we are today.
I'm following.
So, I think that it's very important that homeowners understand what's going on in their area very currently, not something from 3-4 months ago. Because remember, this year, the peak in the market was June. And, to think of if you're going to sell a home right now for what you got back then isn't realistic, because we've seen 3 rate increases since then, and affordability has changed entirely. So, we need to be very informed and using that information as a weapon to help us make better informed decisions when it comes to what offer does come across come across our desk for that home that we're trying to sell.
Good point.
So, but you can get, like, from a buyer's perspective, it's not as crazy as it used to be. You can secure the property you want in a conditional situation. So if things aren't satisfactory, whether it's an inspection, whether the numbers don't work through financing, or if you're going to have a sale of a buyer's property or a sale of the purchaser's property, two different acronyms for the same condition, then, you know, you can, if those things aren't going to work, then you can get out of the deal, and you're not on the, like you were in 2021, 2022.
A better place to be. Yeah, a better place to be if you're going to participate in this.
Market. People aren't losing tens of thousands of dollars in deposits because they can't close on the transaction on time, and then they can't get that money back, and it becomes a legal situation. Like, it is a much healthier environment when buyers can make informed decisions so that everyone's best interests are taken care of. Because there's nothing worse as a seller than thinking, well, I think they have the financing. They didn't include a condition in their agreement of purchase and sale when they
you don't really know.
But their lender has just come in for an appraisal 2 weeks before closing or a week before closing.
Yeah, I don't like that.
The market has changed. It's come up short $30,000, and they don't have 30 grand to close. Whoops.
Yeah.
Like, they're, you know, like, so it's one of those things where, as crazy as that market was, I think it's good. It's much better for people now that we do have the opportunity to put these types of conditions and clauses in our offers, and try and make good informed decisions for everyone, because the seller doesn't want to see their transaction have to go back, or their home go back on the market because the first buyer couldn't close on it either. Nobody's happy. Nobody wins. So it's good that we have the opportunities to do these things now.
Yes, absolutely.
Certainly. Now, I don't have too much else to get into here other than, you know, blabbering on about what's going on with the real estate market. I mean, things are heating up. Like I was saying, we have seen multiple offers coming across our desk. I had 8 yesterday on a property.
Wow.
We had, and again, as I was saying, you know, another agent had 30 that he was competing on as a buyer. So, you know, this is something we are going to see again. So if someone is thinking about making a move, we can have a conversation about how we can strategically try and accomplish those things. Because you can find a buyer for your home. We just need to make sure that we're using relevant information, making the home show its best, so you can try and get the most amount of money for it. So that's really what's important right now that people should consider.
I know we're going to wrap up this session. Next time, I'd love to share some programs or some benefits for our self-employed clients. You know, we've touched on that in the past. I have more options now, so I'd love to jump on next time and get into those details. There's so many self-employed. There's so many self-employed clients.
We're almost in December, right? So the year end's about to wrap up, which means tax season's right around the corner, right? I don't freak you out, right? But that's going to be here before you know it. So it's probably a good thing we do jump into that and share a little more information.
Let's cover that next time.
Owners. Absolutely. Well, thanks again for everyone who spent some time watching this with us today. We'll be back with you again in 2 weeks, and you'll find all of our contact information at the end of this video here. So until next time, bye for now.